For example, look at my schedule. This schedule here, or this diagram here, will summarize in simple terms what used to happen in early audit and what is happening in modern audit, today's audit. In auditing, we say what used to happen in early auditing was one, the objective was to detect errors and frauds. Objectives was or were to detect and prevent errors and frauds on a timely basis. Errors and frauds on a timely basis. Today, we say the objective is to write a report. Objective is to write a report on the company's financial statement. In early auditing, appointment of an auditor, removal and duties of an auditor were done by the who? By the management. Appointment was by management. Today, a manager cannot appoint an auditor. We have the shareholders. Appointment is conducted by shareholders. That is another particular element. Earlier on, we had said that the auditor's liability was limited to contract. Today, auditor's liability is open. You can be sued for civil and criminal liability. Liability is open to criminal and civil liability. So it doesn't matter whether you are going to be having a contract or not in modern world. You can be sued as an auditor for your own negligence or for personal negligence. We can also go ahead and say auditor's independence was not a requirement. Auditor's independence was not a requirement. Whereas in today's audit, modern audit, we say auditor's independence is a fundamental principle. Auditor's independence is fundamental. That becomes another particular differences. Something else that I had said earlier on is that the report was addressed to the management of the company. The report here is addressed to the shareholders. So you can say report was to management. Report of today is to who? To the shareholders. Report is to shareholders. Earlier on, we had also said that the auditor will do both auditing and accounting. Here, the auditor does pure audit. You cannot combine. In modern auditing, is either you are doing auditing or you are doing accounting in different engagements, but you cannot combine them as maybe as one. So we can say could perform both auditing and accounting. Auditing and accounting. So we have agreed that in the modern audit, we do pure audit. Pure audit. Pure audit means you cannot do what? You cannot combine. You can only do once. So if you go to the features that we had earlier listed concerning the area audit, each and every feature will give you another feature for modern auditing. Where you say that the auditor was appointed by the management, here you say the auditor was appointed by the shareholder. Where you say the duties were defined by the management, here you say the duties are defined by the Companies Act. And that is what we refer to as the differences between area auditing and modern auditing.